Stock market took a bit of a hit today with the Dow Jones down more than 300 points. The S&P slightly down and the Nasdaq ended in the positive, up 30 points. Joining us live is Paul Lane with Armstrong Advisory Group. Paul, thank you for being with us again.
Thanks for having me.
So today's closing numbers, just a snapshot of really the overall picture, as they always are. The Dow had an all-time record just a few days ago. But now the shutdown is over. We've missed 2 straight months of key economic data. The Federal Reserve is expected to hold another interest rate meeting next month. So how do you expect all of that to play out?
It's making their job really difficult. They've been operating in the dark here for the last few months. It does seem like we will get the September jobs report next Thursday, but they still will need to parse through when they will release any inflationary data from the month of September. And in terms of the data from October, it's unclear if they're going to be able to put that information together. Where we sit at this point is initially it was all but assumed that there would be another interest rate cut for that next meeting on December 10th that you alluded to. Now, if you look at some of the futures probabilities, it does appear that there is more of a majority to say that we will stand pat and not make any change in terms of interest rate direction. But of course, a lot of economic reports have to come out and be digested before that meeting next month.
Sure. And, this week the White House signaled that October jobs report may never be released. As you
Right.
mentioned, we could see the September report next week. And, that could impact, as you said, the Fed's decision making going forward. But could it also impact planning and decision making for companies across the country?
Yeah, it's a great question. There could be some impact there potentially on what debt that they're willing to take on or future plans for expenses for next year. But the good thing in their favor from a company perspective is that they're talking about a 0.25% cut here potentially at the next meeting. So whether or not they go down that road shouldn't majorly change the direction of any companies and what they're looking at for 2026.
Sure. And with all the concerns surrounding the lack of economic data here, what does this mean to just the normal consumer, the average consumer, without a clear picture of how the economy is actually doing?
It's difficult. The inflationary front is something that is probably going to be welcomed on the consumer front, just to get a sense for what are we seeing in terms of price changes, and it's hard to get a good understanding of that right now, other than just kind of looking at your receipts on a month-to-month basis. But any more economic clarity that they can get, that is going to be big going into next year if we can get some of that. And then obviously on the stock market front, not only is the Federal Reserve and interest rates a big focus, but also, of course, artificial intelligence is on everyone's minds too. And so that bears very significant for consumers and job workers out there heading into 2026.
Some changes going on. Paul Lane with the Armstrong Advisory Group, thank you so much.
Thanks so much.